السلام عليكم ورحمة الله. بسم الله والحمد لله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity Club by Ahmed Chawi. Today is Sunday, the 16th of March 2025. I'll be doing the weekly market review. Starting with the XY, here we have the weekly time frame chart. As you can see, price has swept the sell side liquidity that I was looking at last week. Now we have formed a sell side liquidity, a sell side imbalance, buy side inefficiency, a favor gap. I'm expecting price to retrace back into this and this being considered an internal range liquidity, so I'm expecting price to retrace towards it before continuing running down lower towards this Fibonacci gap and this low right there. Going to the daily time frame chart, we have this daily Fibonacci gap, this daily Fibonacci gap, this daily Fibonacci gap as well. We have here a bearish breaker. We have a low high, low, higher high, lower low. So this candle right there is my bearish breaker. Price might retrace to it. We have a Fibonacci gap here. This is a bearish unicorn. I'm not saying this as a means of a signal for you to trade it, but more of like what is going inside of my head. So that's going to be pretty much it for the XY. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. Euro USD has also sold the buy side liquidity as well. So we have a favor gap here, busy, buy side imbalance, sell side inefficiency. I'm expecting price if it wants to retrace back towards it and then continue running up higher towards the buy side liquidity here and this buy side liquidity as well. Going to the daily time frame chart, you have a daily favor gap, just like the XY. Price might retrace towards it because we've taken out an external range liquidity. I'm expecting price to retrace back towards internal range liquidity, and from there we can continue running up higher towards the buy side liquidity. So that's going to be pretty much it for Euro USD, or also known as the fiber. Going to Pound USD, also known as the cable. Here I'm doing the weekly time frame chart. As you can see, the pound is still yet to reach towards this buy side liquidity, as you can see. But we're pushing up here. We have formed a favor gap. This candle is high, this candle is low. Busy buy side imbalance, sell side inefficiency. So price might retrace towards it. Touch this inversion favor gap here as well, because we closed above it. Like we closed above it, so this is a favor gap. Since we closed above it, it's not considered to be an inversion favor gap. If price retrace towards it, I want to see some reaction that pretty much reject any lower prices that can push price higher to the passive liquidity. So it would act like a launch pad or springboard to the upside. Going to the daily time frame chart, you can see these are the favor gaps. Price might retrace towards it. It will take the sell side liquidity, it will reach to the favor gap, and then from there it will reach to the buy side liquidity. I mean, it's now close to this to the buy side liquidity, so from here it might just jump towards it and hit the target. Otherwise, if it wants to stay, if it wants to stall and just spend some time, it would consolidate, take out the sell liquidity, reach the favor gap, and then from there just run to the buy side liquidity. So that's gonna be pretty much it for Pound USD, or also known as the cable. Going to gold. Here I'm using the daily time frame chart. Last week I showed you that I'm looking for high prices attacking this buy side liquidity and this price good as well. So we have Friday, Thursday, Wednesday, Tuesday, Monday. Monday was the lowest price that was printed. Then we have Tuesday, Wednesday, Thursday, Friday. We just continued running up higher, reaching to the targets. On Thursday, we reached to the terminus that I was looking for. From here, price I'm expecting price to retrace towards this favor gap, the recently formed favor gap. From here, because we have a bullish breaker, so low, high, lower low. We swap the lows here and then higher high here. So this is a bullish breaker. Price, if it wants to run up higher, continue running up higher, because we're trading at the all-time high. We just reached to the $3,000 price level, and this is nothing to what it is priced in to the next year, pretty much, because BRICS nation are accumulating gold to back up their currency. So it's pretty much being held at this price so they can accumulate more. It's things that we cannot control. It's things that are only the people with actual power can control. Yeah, I don't know if you can understand what I'm talking about, but yeah, that's gonna be pretty much it. You know, it's like someone with more power than we do, they can control the prices. So if they're controlling the price of gold and they're accumulating it to back up their currency, I'm pretty much telling you something crazy, that if that's true to an extent, which actually if it's true, because if you Google it, it's actually true, because they're actually accumulating gold to back up the currency. At the same time, they're holding they're holding the price of it at this level. So anyway, from here I'm bullish on gold. But regardless, we might have a period of consolidation, retracements to take out sell-side liquidity or to reach into favorite gaps like this favorite gap here or favorite gap here. And I know you might hear some noise in the background, but I'm just busy. I cannot record it anywhere because I'm on the go. And yeah, so you just have to live with that noise, you know. Anyway, that's gonna be pretty much it for this weekly review. I really hope you found this one insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.